Welcome back. Let's tee up the trading day ahead and bring in our panel. Joe Zacks is still with us, Ardwolf Global Solutions, also former Deputy Assistant Director of the CIA for Counterterrorism. Let's also bring in Paul Hickey of Bespoke Investment Group. Joe, I want to pick up where we left off on the other side of this break, and that is in real time, your assessment of what we're seeing play out in Iran. I had an interesting conversation with a defense and intelligence person yesterday who basically made the point, and I think it's a key one for the conversation, that Iran has had 4+ decades to prepare for a doomsday scenario, and that's what we're seeing play out right now in terms of their retaliation.
I mean, that's a fair statement that they've had the time to prepare. But I think we've had an equivalent amount of time to prepare, and our capabilities are certainly far greater than theirs.
Yeah. Paul, market reaction. Obviously, you've seen a lot of volatility, including under the hood of the S&P. We've been talking about it all hour, the fact that we've been such a narrow range, and we're still only down something like 1% this week on the S&P, even though it's felt much crazier in the trading sessions. But how to put all of this in context in terms of investor positioning and market reaction? What are you watching closely?
Yeah, so I mean, I think what we're seeing here is, despite the tight range in the market this year, there's been a ton of volatility underneath the surface. In the S&P 500, there's more stocks up or down 20% than up or down less than 5%. So there's a lot of moves at the extremes. I think what we're looking for in the market here, and the number one thing to focus on, is how long oil prices stay elevated. We saw one of the most overbought readings in short-term overbought readings in crude oil in the last 40 years earlier this week, as of yesterday. And then, what you typically see during those periods is over the next 1 to 3, 6 months, oil prices tend to fade back. So if we see that historical playbook play out, the market should do fine, I think. But the longer we stay here, the longer crude stays near 52-week highs, the more of a negative it is for as an economic headwind, and hence the global economy.
Yeah, Paul, it's interesting. The Journal made the case of this is not a flight to safety trade, but perhaps a shift from oil losers to oil winners. And here's why they're saying that. Only 16 times since 1983 that Brent crude gained more than 7%, with gold down and bond yields up, and that more than half of those times stocks actually rose. The S&P 500 never fell 2%, which is what we did see Tuesday morning. So how does it speak to what is moving through the market, at least here in the near term?
Well, I think that's a big what we've seen this week is we've seen some of the biggest outperformance of the U.S. relative to the rest of the world, a reversal of that trade that's been in place since the November 2024 election. The U.S. is much more insulated from higher oil prices than the global economy. So if oil prices do stay elevated, again, it's a negative for the global economy, but the U.S. economy should fare relatively better. I mean, we're net oil exporters, whereas the rest of the world is very dependent on Middle Eastern oil.
Joe, with the Strait of Hormuz essentially in standstill right now, President Trump coming out yesterday and saying, hey, we're going to start offering insurance to crude oil tankers, with those rates spiking here, and perhaps even repurposing Navy vessels to help add a layer of security. Can we do that? How quickly could that happen? And what would that actually look like when you think about how Iran has prepared itself for a moment like this in Hormuz?
Well, I think we can do it relatively rapidly. The question will be how much will commercial shipping want to transit the Strait of Hormuz during an active military confrontation. We're fortunate that the Iranians have not mined the Strait of Hormuz near as any reporting I can tell, and that's important. And the fact that we have so severely degraded their Navy is also going to limit their ability to take offensive operations in the Strait of Hormuz. So I think our Navy and our government has prepared for that, and will put some plans into place to at least indicate that that shipping and commerce is not going to be severely impacted. But I also am just somewhat skeptical about how much will flow through during an active period of hostilities.
How should we be thinking about the risk of asymmetric warfare, whether it's cyber or something else?
we need to keep that very much at the forefront of our minds. The Iranians, going back to your previous comment, they've prepared for over 40 years, and asymmetric warfare has been part of their preparations. They have global terrorist networks, and in fact, they currently harbor the leader of Al-Qaeda, Saif al-Adil. So we need to be attentive to that. I think the FBI has done a very good job of indicating heightened awareness toward that. I think large metropolitan areas such as New York City are taking this very much into account, and other global partners are as well. Cyber, there too, they have an offensive cyber capability that we need to be aware of. We have the ability to defeat it, but it can be disruptive, and I would pay close attention to that.
Yeah. Paul, we're having this conversation. We've been seeing all of this movement ripple across global markets as well. We've been talking about the Kospi finishing down 12% today as one key example of that. Does Broadcom, after the bell, shift the narrative, at least stateside, back towards this AI trade, especially since we know semis have been one of those areas that investors have been rotating out of amid all of this geopolitical angst?
Yeah, I mean, so it depends really on what happens on the geopolitical side. So if Broadcom has a big report and we don't see a lot of new headlines coming out of the Middle East, yeah, maybe it does. But, this is an ongoing situation. It's very fluid. So to say that this is Broadcom's earnings will be the be-all and end-all is a little bit trying to predict the future that nobody knows. But you go back to the Kospi, down 20% in the last couple of days. It's still up over the last month. So I think some of these markets were very extended, and we're just seeing an unwind of that excessiveness. Okay.